Hi, my name is Matej. Welcome to X-Series News Broadcast. Here's the latest high-impact market news for the week ending April 5th. The highly anticipated Bank of Japan meeting was the main focus last week, and new Governor Kuroda didn't disappoint. Yen was sold off broadly after the Kuroda announced radical overhaul of the monetary easing. While yen caught most attention, it should be noted that the strength in European majors have been impressive towards the end of the week. Despite all the negative news out of Eurozone, Euro staged a strong rebound as ECB President Draghi emphasized the determination to defend Euro in the post-meeting press conference, and the common currency picked up strength from there. A string of weaker than expected economic data, including the ISM indices and NFP, sent the greenback lower against European majors. But commodity currencies also weakened, partly on data, partly on risk aversion. The new Bank of Japan board announced aggressive measures to combat deflation and boost the economy at the April meeting. Policymakers shifted the monetary policy target to the monetary base from the overnight call rate and pledging to double its government bond holdings in 2 years. The moves have shocked the market, sending Nikkei 2% higher but pressuring Japanese yen. These signal the Bank of Japan's determination to boost the economy and combat inflation. The key economic data from the US last week were disappointing. Non-farm payroll showed 88,000 growth in March only, less than half of expectation of 190,000. That's also the lowest number since the June 2012. Unemployment rate, though, edged lower to 7.6%. Now, the most important upcoming fundamental news for the week starting April 8th. The week ahead begins by earnings season kickoff by Alcoa. Investors will be also awaiting Wednesday's minutes of the Federal Reserve's March policy meeting. Amid speculation over when the central bank may begin to wind down its asset purchase program. The US is to round up the week with official data on retail sales, producers' price inflation, and preliminary data from the University of Michigan on consumer sentiment. Before Friday's US opening, JP Morgan and Wells Fargo are due to release the results for the first quarter. Aside the weak US non-farm payrolls on Friday, the key driving factor for Euro last week was the ECB meeting on Thursday. The bank announced to leave the main refinancing rate unchanged and added no unconventional monetary easing measures in April. It is believed a key factor in driving the Euro higher was Draghi's strong emphasis on keeping Euro in the post-meeting conference. Draghi said that some people have vastly underestimated what the Euro means to the Europeans and vastly underestimated the amount of political capital that has been invested in the Euro. He strongly stated that there is no plan B. The dollar extended sharp gains into a second session against the yen on Friday, as aggressive new monetary easing measures from the Bank of Japan overshadows Friday weaker than forecast US jobs data. The yen dropped more than 3% against the dollar on Thursday after the Bank of Japan said it plans to double its asset purchase program over the next 2 years and extend the maturities of the bond it purchases. As well as on the euro-dollar pair, investors will be awaiting Wednesday's minutes of the Federal Reserve's March policy meeting and US data on retail sales and consumer sentiment on Friday, in an attempt to gauge the strength of the US economic recovery. Finishing up our broadcast is the multi-trader section. Today's multi-trader strategy is Trader's Cap, which is one of the high-risk strategies. It made a 0.7% profit last week, and today we have chosen its monthly gains for the last 3 months. Its performance is rising, and the strategy was profitable in February, gaining 1.55%. It managed to achieve 7.2% during March and has made a profit of 0.72% so far this month. That's it for this week. Tune in next Monday for more in-depth currency news that matters to you. And as always, don't forget to check us out on Facebook and Twitter. Goodbye.